Hi, I'm Liz Baumgartner, and I am the Director of Economic Development and Tax Policy here at the Ohio Chamber of Commerce, and this is my Market Minute. Today we're going to be talking about some of the big tax changes here in the state's operating budget. One of the most noteworthy provisions was the reduction of the state's income tax, trying to get to a flat rate of 2.75%. So in 2025, it reduces the top bracket, which is over $100,000 in income, from 3.5 to 3.125%. In tax year 2026, you're going to see that top bracket reduced to the flat 2.75%, and that's applied to all income over $26,050. And of course, this rate reduction only applies to non-business income. So the legislature did have to make quite a few different choices on how to pay for this income tax cut, how to make up that revenue. So we did see a number of sales and use tax exemptions that were eliminated. Some of these include on advertising materials, certain rentals of motor vehicles, refrigerated food vending machines, telecom services, tangible personal property used in disseminating data by electronic publishing. One that we were particularly concerned about here at the Chamber was the elimination of the exemption for data centers. So after the legislature eliminated the exemption for data centers, the Chamber advocated to Governor DeWine to veto this provision and retain this incentive, and we are very thankful that he did. The Chamber just came out with a study from our research foundation showing that the data center industry added $11.8 billion to our state's GDP in 2024, contributed $1 billion in state and local tax revenue as well. So we're very thankful that this provision is still retained now in current law. A few other provisions we were surprised to see in the budget was the elimination of interest on the county portion of sales and use tax refunds, direct pay permit holders. It eliminates the tax on refunds for them filed a little later this year, although it still allows the department to assess that. So it also in the budget limits the sales tax vendor discount, which is 0.75%, to $750 a month. It also in the commercial activity space changes the net operating loss credit from the old corporate franchise tax from a refundable to a non-refundable credit for CAT, I believe, starting in 2029. In addition to the sales and use exemption changes, income tax changes, we also saw quite a few property tax changes debated in this budget and actually passed in the budget as well, with a focus on addressing the unvoted increases from certain school district levies, expanding county budget commission authority, and clarifying property tax challenge procedures. The governor did end up vetoing 67 provisions in this budget. Most of the property tax provisions were included in that number, with the exception of the provision clarifying when political subdivisions can challenge property valuations. The Ohio Chamber of Commerce, as part of the Ohio Taxpayer Protection Coalition, was very engaged in the property tax conversations this year, with a focus on increasing transparency, limiting excessive balances, and having a more broad recognition of levy types that go and count towards the 20 mil floor. Some of the property tax language that the Chamber and the Ohio Taxpayer Protection Coalition that we championed were included in the budget. This is language from bills like House Bill 28, House Bill 232, Senate Bill 66, and we know that items such as House Bill 129 and House Bill 309 are being considered and debated as well. So there were 4 items, property tax items, that the governor had vetoed. Item 55 has to do with county budget commission authority. 63 has to do with the cash balance carryover for school districts. Item 65 is the 20 mil floor calculation, and item 66 that we're going to be focusing on is the school district property tax levy restrictions. So the Ohio House did meet this summer in July to override veto item number 66 with a vote of 61 to 28, mostly along party lines. This provision eliminates the authority for political subdivisions to levy replacement property tax levies and the authority for school districts to levy fixed sum levies like emergency substitute. Lawmakers have until the close of this General Assembly on December 31st, 2026 to potentially overturn the other 3 property tax vetoes or any of the other vetoes from the budget. The Chamber did issue a key vote alert to all the members of the legislature, urging them to support these property tax veto overrides to help curb soaring property tax valuations that are affecting both homeowners and businesses. The Senate has not yet scheduled an override session, but with the legislature returning from summer recess, we are hopeful that there will be action this fall. Meanwhile, in the next about week, we should have recommendations coming out of the governor's property tax reform working group. They are tasked with issuing their findings before September 30th, so we do expect there to be more movement on property taxes this fall. Thank you so much for joining me for today's Market Minute on taxes.